After all, today turned out to be not such a bad day for Tesla stock. Here in this video, we will discuss what I believe is the path forward for Tesla stock throughout 2024. I will identify some potential risks that you need to be watching for as well. I do believe this is a very important video for as many Tesla investors to watch as humanly possible. So do me a quick favor and hit that like button, and let's get started. So I think number one, first things first, it's important to acknowledge, and hopefully by this point everyone understands, this is a different Tesla from what you've seen in 2023 and what you've seen in 2024 up until earnings. You had 4 quarters in a row where Tesla stock dropped more than 9%, and it was just a disaster of an earnings call. 4 quarters in a row. There was a lot of uncertainty about the business itself, but where the management was, I mean, you could hardly get a constructive sentence out of the last 4 earnings calls. And they obviously took notice. Maybe they had some media training, IR training, who knows? But something drastic changed the last earnings call. It was very good. You walked away from that with a solid understanding of what's next for Tesla. And that's what markets care about. They don't care about what has happened. They care about what's going to happen. And we got a lot more clarity there. So from that perspective, Tesla has metaphorically changed following Tesla's last earnings. See, you can have a company like Tesla that is a long-term winner. I don't think anyone is really going to argue that, or at least not anyone with half a brain. They're not going to make the argument that Tesla is not going to win long-term in EVs. I don't hear that. The bear thesis really was for Tesla is demand's obviously slowing down in the near term. With that, Elon Musk is not really present. Tesla's not really doing things to drive shareholder value in a way, even if you look at like Apple, right? Apple just had some really bad numbers. I mean, really bad numbers. What they do instead, they did a share buyback. They raised their dividend because they managed to hold up profitability. Now, Apple and Tesla are far different creatures, but if you look at Apple's performance, still sitting relatively close to all-time highs, even though Apple is a business that does not grow anymore, and it hasn't grown for almost 2 years now. Apple has done well. I would say half of it is because of Tim Cook and the management's, communication with markets. And you would always walk away from Apple's earnings call with an understanding of what's going on with the company. Tesla is now doing that, and last earnings showed a lot of investors just that. Now, Elon and the Tesla team obviously gave the markets what they want, and that is lower priced Tesla models. Elon indicated potentially multiple models that could be coming by the end of this year. Now, we're going to know more coming on August 8th, what these models may look like, when they could start production. A lot of that August 8th event is going to be focused around robotaxis as well. So I think that could be a whole new round of optimism that could come into Tesla stock. And that's one of the next big upcoming catalysts for Tesla. Now, between now and then, we will also have Q2 delivery numbers that will come out. And based on my checks so far, things look pretty good. Number one, Google Trends data is not supposed to be this strong this time of the year. And in fact, you were hitting 1-year highs for the search trend data, meaning that Q3, Q4, Tesla's prior, record quarters back in 2023. I mean, you're hitting search trend levels that you haven't even seen during that period of time. Better than Tesla's previous high. Now, do I think Tesla's deliveries are going to come in at a new all-time high? It's possible. Probably not. That wouldn't be my base case assumption, but I think you're going to be in for some really good delivery numbers coming soon. And we do have an imminent launch of FSD that will be entering the Chinese market. Hopefully in the not so distant future, Tesla basically has permission to launch FSD in the country. They've recently launched enhanced autopilot, pretty close to FSD, in the country. So when that does launch, that'll be another very positive catalyst for Tesla that could literally happen at any time. And I would argue, based on the unusually bullish option activity from big money in Tesla, that catalyst could come sooner rather than later. It looks like some big money investors, hedge funds, institutions, and money managers, they're starting to buy a lot of Tesla bullish options. That is buying calls or selling puts. And usually when you get this kind of option activity that's super bullish, you tend to get some good news to go along with it. Also important to keep in mind, Tesla has a very high short interest. In fact, the highest amount of shorts in Tesla stock in many years. So with all of these positive catalysts coming in the not so distant future, let's call it the next 2 to 3 months, in my opinion, I mean, that's not exactly a great position for the shorts to be in. And I think inevitably with this psychological change you have now seen in Tesla following Tesla's last earnings, I think it's not if the shorts get squeezed out of short positions, but rather when do shorts get squeezed out of short positions. You do have 3.85% short interest of free float with $19.21 billion currently in short positions, with 106.72 million shares that are currently out on loan. Now, I realize most of you guys are not trading Tesla. Most of you guys are not in Tesla for a short squeeze. I fully understand that, okay? Myself included. I'm a long-term investor in Tesla. But what can happen with a short squeeze in a company that is deserving of a short squeeze? It's not just some kind of one-off news event that causes momentum to enter into a stock. With a company like Tesla that is actually doing things to create shareholder value, a short squeeze could help you hold up higher prices. Meaning, for an example, if you were to go through a theoretical short squeeze right now and Tesla stock were to hit, let's call it 240, 250, after a short squeeze, it might be easier to justify Tesla in the 240s or 250s, even with no new information, because people are like, hey, you're going to have new lower price models coming by the end of this year. FSD is going to enter the Chinese market. Year over year comps starting in 2025 become very easy. All of these things could justify Tesla stock being higher than where it is today. Still, you've seen a massive decline this year, and Tesla stock really started 2024 around the 260 level, and you're still nowhere even close to that. You're still $80 away from that right now. And I do believe the further we get into 2024, the more I think Wall Street is going to start paying attention to 2025. And just for context, Q1 2024, the quarter that was just reported, you only had 45 cents of EPS. Tesla's going to be able to come in and smash those numbers in 2025. So your year over year comps are going to look stupid good for Tesla. And again, that is another reason why I am bullish on Tesla throughout the rest of this year. And let's face the fact, it is an election year. So there's going to be a lot of political headlines. There's going to be a lot of capital moving around into areas in which markets will, believe will benefit from whichever political party. And the bottom line is, it's not very favorable for anyone to see a crash during an election year. So that's probably not going to happen. Now, how do you get a crash from here? Well, here's the biggest risk factor for Tesla this year, and really even heading into next year, and could be one of the biggest benefits to Tesla as well. Today, you had non-farm payrolls that came in at 175,000 jobs. If you strip out healthcare alone, you would be about 90 or so thousand jobs for the month. The unemployment rate ticked up from 3.8% to 3.9%. You did have a little bit of bad news with ISM service prices paid. That did come in a lot higher than expected, and that's the reason why you're seeing a lot of volatility today. That's the reason why stocks are not straight up. You had news that the labor market is softening, and you could actually make an argument that it's softening quite a bit. Again, excluding healthcare, and the situation looks not so great. But that ISM services prices paid number did come in pretty high. Now, I guess there's two different risks for Tesla in 2024. Number one is the economy continues to hold up, inflation continues to be high. That's your stagflationary argument. But I mean, Jerome Powell said he lived through stagflation, and quote, "I don't see the stag or the flation." So it doesn't look like the Fed is concerned about stagflation at all. And again, the Fed has been wrong before, but I don't think it makes a lot of sense to be too concerned with stagflation right now. But if that narrative does continue to develop and it looks like we are heading into a stagflationary environment, that's obviously going to be bad for stocks. The biggest, and I mean by far the biggest risk factor for Tesla this year is a potential slowdown, a recession. As badly as the markets want to see non-farms come in low and economic activity really slow down, that's not going to be good for stocks. Think about 2022. Stocks did poorly without a recession. Yes, sure, the first half of the year, technically you were in a recession, but it was not declared a recession. The whole year did poorly though, and you especially bottomed in October of 2022, and everyone thought there was going to be a recession to start 2023. That obviously didn't come, and stocks did well because of that. My point is, if you get recession fears, most of the time that's more negative for stocks than the actual recession itself, because people start to, fears start to run wild. When people start to expect a recession, they start to make crazy forecasts and sell stocks in anticipation of that. Now, with this non-farm payroll report that we just got, as I shared in the last video, things can go south quickly in the labor market when it starts, right? And this was the first 60,000 job miss you've seen on payrolls in a while. And historically, what you see is 100 so thousand, 50,000 job ads added that the next month, and then you're negative, right? So within 2 months, we could be negative. And I think that is a potential problem. Stocks would sell off on that. But to the contrary, especially for a stock like Tesla, the Fed would start to cut rates pretty dang soon. If you get another really bad jobs report, and let's say this one's 50,000 jobs added, the Fed's going to start cutting rates, probably by the next meeting. And that would be good for Tesla and maybe offset some of the panic, I would imagine, that would be in the markets at that time. But there's always that risk that the recession fears kind of overpower everything else. Markets love rate cuts. They love when rates go lower. But they don't love when rates go lower more than they hate a recessionary environment. And that's why historically when the Fed cuts rates, you tend to see markets fall about 23% over the course of about 195 days. So normally when the Fed cuts rates, it's because something broke and stocks sell off. Question really is, does the Fed wait too long to start cutting rates? And I think the markets will determine that at kind of the time the data is coming out. And I think you'll see that reaction. My expectation is things are going to weaken further from here. I don't think you can have McDonald's and Starbucks and KFC and just simple, everyday fast food restaurants slowing down at such a severe degree and not see some kind of softening in the labor market or the economy. I think those two kind of go hand in hand. And so really long story short, that is the biggest risk to Tesla stock this year, but it will come with some good news because you will get rate cuts. And for Tesla's business, that is, any car business historically is 80% financed, meaning consumers. If 100 people buy a Tesla, about 80 of them are going to have a loan on that Tesla. If rates go lower, that's going to open up the door for more people to own Teslas, more people to upgrade their Tesla. Maybe they bought in 2020 or 2021 or 2022 and go out and get a newer vehicle. It's also worth mentioning that the average Tesla buyer makes more money than the average Ford or GM or Toyota buyer. So they may be a little bit more cushioned, if you will, for a slowdown in the economy. But minus any drastic slowdown that prompts recession fears, I do think things look overwhelmingly positive for Tesla going ahead throughout 2024. Especially if inflation does fall in this next report, and the report after that. I mean, by July, Tesla could really be taking off. July heading into August 8th, I could envision Tesla being in the high 200s, if not closer to about $300 per share. I could envision that scenario if at that point the Fed can start cutting around July, around summertime. So for anyone that doesn't have a lot of exposure in Tesla, that thinks they missed out, again, let me just put that into context. For Tesla to get back to the levels you were at to start 2024, around $265 per share, let's call it, that would be upside of almost 46% from here. That would be upside of what, $65 per share? $85 per share, $86 per share. That's quite a bit. And I personally think this is one of the best periods to be dollar cost averaging into Tesla, because we have a lot more clarity on what to expect with the business on all different fronts and metrics. Newer price models coming by the end of this year. Tesla looks like they're going to focus more on profitability. They expect to have positive year-over-year delivery growth despite what we've seen to start 2024. You've gotten a lot more clarity, and I think that clarity is more valuable in ways that I don't think retail can even comprehend, or at least a lot of people in retail, right? A lot of average people, I don't think, understand the importance of Tesla's last earnings. But stocks don't go up in a straight line, and there's been a lot of volatility on a day-by-day basis, and I expect that will continue. But one, I think the shorts are going to get squeezed on their short positions, probably in June, if not July. I think the economy is going to weaken a little bit, but maybe not enough to prompt recession fears. I think you'll want to see a balance between economy weakening, the Fed starting to cut rates. If you get a good balance there, then stocks can do well, and especially a stock like Tesla will do really well. And that's kind of my expectation at this point. Jerome Powell is basically begging for a reason to start cutting rates. And if inflation had never spiked like we've seen in 2024 so far, you would probably already have 2 rate cuts in by now. So I do think the future looks good for Tesla. Let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. Now, 2024, yeah, I think it's going to be a great year, especially towards the end of this year. I think Tesla can be 300, maybe higher than 300, just depending on the course of the economy and the Fed. But I think 2025, I think that's when you see new all-time highs for Tesla. Maybe, maybe not. We'll see. Let me know what you think down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a fantastic rest of your day, and I will see you in the next one.